Welcome to the Defiant Podcast. The Internet of Money is being built with blockchain technology and without banks. We call it DeFi, short for decentralized finance. And this is where you can hear the builders and users of this cutting-edge world tell their stories firsthand. I'm your host, Camila Russo. In this week's episode, I speak with Suna Amas of Vault Capital. Suna saw the value of crypto from very close when her family lost most of their savings when Lebanon's currency crashed. She immediately told them to move their money to Bitcoin to protect themselves against further currency devaluations and currency controls. She was working on a startup as an engineer while trying to learn about Bitcoin and onboard others into the space, and she realized there was very little information about crypto. So she decided to start the newsletter called Token Daily, which quickly became one of the most popular news sources for the space. The newsletter went from being a network of information to a network of people, thanks to live events. That's how she got to meet great teams building interesting projects in crypto and see their progress before anyone else did. When she saw big funds come in and invest on the teams she also knew had potential, Suna realized she had an edge and decided to start her own fund, Vault Capital. She raised $10 million for the fund earlier this year, backed by CMT Digital, Balaji Srinivasan, and investors from Unisquare Ventures and Founders Fund. Her focus is on pre-seed and seed investments. In this interview, she talks about her investment thesis, how she evaluates founders, and what it's like to be a VC in a crypto bull market. She says that while public crypto markets are cooling off, private equity markets are more insulated. She's not sure whether the current environment is the start of a bear market or a dip in a longer bull market. But regardless, she says builders will keep building and the tech will keep moving forward. Before we get to it, here's a word about our sponsors. Kyber's Dynamic Market Maker, or DMM, is the first decentralized exchange designed to react to market conditions to optimize fees, maximize returns, and provide extremely high capital efficiency for liquidity providers. It aims to be a game changer for DeFi. Depositing tokens to earn fees is also fast and simple, with this liquidity easily accessible by dApps, aggregators, or other users. Visit dmm.exchange now. Don't let high gas costs keep you out of Ethereum. At Balancer, you can trade all you want and get most of the gas costs back in your pocket. In their new BAL for Gas campaign, traders are receiving 6 figures worth of BAL tokens every week. And with V2 just around the corner, Balancer is becoming the one-stop shop for DeFi liquidity. Balancer V2 brings stable pools and weighted pools tightly integrated under a single protocol, flash loans, lending via asset managers, and much more. Check it out at balancer.finance. The new Kraken app is one of the best places to invest in some of the most popular DeFi assets like Uniswap, Aave, Polkadot tokens, and more. Just download the app and get started in minutes. Plus, you can earn additional rewards through Kraken's industry-leading staking product. Payouts are twice a week, and you can earn up to 20% annually on some of your favorite cryptos. Sign up today at kraken.com/defiant or type Kraken in the App Store to learn more. Enzyme provides an easy way to build, scale, and monetize DeFi investment strategies. If high gas prices are shutting you out of DeFi, fear not. Enzyme is now running a gas subsidy program. The app makes it easy for investors to pull together on strategies, lowering costs. The Enzyme interface allows anyone to trade, lend, deposit to AMM pools, farm, stake, and more. It is a non-custodial solution and allows for real-time reporting, security, and transparency. Sign up today on enzyme.finance. Experience DeFi. Deposit, earn, and borrow on Aave. Aave is a decentralized, open-source, and non-custodial liquidity protocol to earn interest on deposits and borrow assets. Deposit and start earning interest in real time directly in your wallet, and swap any of your deposited assets at any time to get some of the best deals on the market. Aave protocol liquidity pools are now available on Ethereum and on the sidechain Polygon. Head over to app.aave.com to get started today. Interested in DAOs? Wondering how to DAO? Colony aims to be the biggest, baddest DAO framework out there, and it's easy. Spin up a DAO in 3 minutes for half a penny. Issue a token, raise money, govern your treasury, and so much more. Zero coding required. Already got a token? Great. Colony will give it superpowers in seconds. DAOs are all about voting, right? Wrong. Colony is about getting things done. And voting on every little thing ain't that. So in Colony, votes are only necessary if there's a disagreement. Head to colony.io and follow @joincolony on Twitter to learn more. Want to DAO right now? Hit up clny.io/bounty to join their bounty program and earn their forthcoming token, CLNY. All right, here we are with Suna. Suna, it's so great to have you on the show. Like we were just saying, it's been long overdue. So thanks so much for coming on.
Thanks for having me.
Yeah, so Suna Mas is the founder of Vault Capital. Vault is a venture firm focusing on pre-seed and seed stage investments in the digital assets space. But you have a really interesting story on how you became interested in crypto. So I'd love to start from there. Like if you can get into your background and how you got into the space in the first place.
Sure thing. Yeah. I guess we can go all the way back to college. I went to the University of Michigan. I studied at the School of Engineering there, and all of us spent way too much time on Reddit. We were all really into crypto. That was the main conversation topic at the time. And I guess not much has changed, in 2021, but the main debate was whether or not the government would even allow Bitcoin or crypto to happen. It was such an interesting community. They had, their own vernacular. And usually that's how you know that something is going to be paradigm shifting or is really going to touch the mainstream in some way, is that there are these new made up words to everything from HODL to using proof of work and its own kind of culture around it, because the mainstream language doesn't sufficiently express what this thing is trying to do, right? So those were all indicators that were really interesting to me. I find Bitcoin and crypto to be a courageous act, right, to take on the financial system as it exists. And those types of movements and types of innovations are really binary, right? It either completely changes everything or goes to zero. So I graduated, I joined a startup called Elation. I was a 20th hire there. We scaled it out to, now it's over $1.2 billion valuation. And while I was there, I was doing Elation by day and crypto by night. So I was helping my colleagues get on-ramped into crypto, helping them set up wallets, and follow great projects in the space, because this was before there were really good outlets, and now there are so many to choose from. They're really quality. But at the time, there was a real dearth. It was like Twitter, CoinDesk, Reddit, and it was really on the reader or the user to navigate for themselves and figure out what the source of truth was. So I started a newsletter called Token Daily that had really humble beginnings. It was simply a way to figure out what was going on in the space and to figure out up from down, left from right, frankly. And it was like one of the earliest newsletters. So we grew like wildfire. I didn't spend anything on marketing. And soon enough, projects were proactively coming to me to be featured. So Lolly launched with us. Compound's initial launches with us as well. And we grew this great readership base and had quality information that we would curate and as with your work, it really takes a lot of effort to create a trusted source of truth in the crypto space. So at some point I remember thinking, well, look, this reader base needs to meet each other and needs to know they aren't the only ones behind the screen reading Token Daily. So we started hosting on and offline events, and soon enough, Token Daily went from a network of information to a network of people. And that is very powerful, because all of a sudden it went from a one-sided push to read get some feedback for myself. And it transformed to this community where it organically was tapping into this kind of network effect. People were talking to each other about job opportunities, co-launching companies together. And it became this living, breathing thing that no longer needed my moderation or assistance and just kind of grew on its own. And at that point, I started seeing incredible companies that and help them build out their teams. They'd want product feedback, and that really started planting the seeds for launching Volt Capital.
Oh, wow. So interesting. I really want to talk about kind of how you built this community, but first, like I want to go back to just like more on your background and like why you found crypto so interesting and so useful. So I understand like you also onboarded your own family to use crypto. So if you can kind of share that story as well.
Yeah, sure thing. So people who know me know that I'm really motivated by two things. One is democratizing access, and two is integrity of information. That's why I joined Elation. It's a data cataloging company that quite literally allows you to source data and understand the lineage of it, its hygiene, et cetera. And it's also why I was interested in Bitcoin. It was really this combination of the two things, and I think it did it really powerfully. In addition to that, I grew up where money was really tight. So I always had this very fundamental understanding of the inequalities in financial systems that we use today. This became more pronounced only recently when the Lebanese lira lost the peg to the dollar, which it's retained for decades now. No one in Lebanon, at least from the civilian standpoint, saw this coming. And I'm Lebanese. My extended family is all Lebanese. And, they went from having their wealth stored in banks, in their, in cash, and overnight lost 80% of it. And so that was staggering. Like it really destroyed their quality of life, continues to do so. And I remember telling my mom, well, we can send them Bitcoin. And she responded with, it has to go through the banks. The banks have capital controls. They won't be able to use it or store it. Or if they do end up getting it, they'll only have crumbs left. And my response is, it doesn't have to go through the banks, actually. This is why we're doing this entire thing. So I think that moment was really when it clicked for my family that there's this real substantive use case outside of speculation, outside of the casino that mainstream media paints crypto to be.
That's such an inspiring story. What year was this, just to get kind of the framing?
Oh, for Lebanon's lira debacle. That was just as recent as a couple of years ago, and still ongoing. Right.
And so how has Bitcoin helped your family there? Like, were you able to are they able to transfer their money to Bitcoin from the lira? Like, how are they using it?
Right. So they're able to store their wealth. So right now it's just simply preservation of their wealth. They are not transacting as much, but it's more preservation for their savings. There's a lot of growth, and there are a lot of opportunities for growth on the transaction side and medium of exchange side. And that certainly starts with merchants, right? Unfortunately, there just haven't been many merchants onboarded to Bitcoin in Lebanon, though I think that's going to change. We see El Salvador as the precedent, and I believe many other countries will follow suit.
Amazing. Have you told them about DeFi, about maybe storing their wealth in stable coins and earning interest? Like, is that kind of a shift that you're seeing in your own family, and maybe something that you think kind of will continue growing in emerging economies?
Oh, absolutely. Stable coins are huge. They Bitcoin itself has more notoriety. It was certainly first. And so I believe Bitcoin is the entryway for a lot of folks in remittance corridors and places where their local currency is crashing. And stable coins then are typically the next thing they discover. Mm-hmm. And yeah, they're all getting onboarded onto it. And just look at the numbers. Stable coins have grown tremendously. We're seeing them as a major method of payment between remittance corridors, and and are experiencing explosive growth. They're not going away anytime soon.
No, for sure. I think kind of those experiences of people kind of actually being able to preserve their wealth in countries where you see an 80% drop of the local currency, it's just like such a strong case for like independent currencies that don't rely on central banks and are just a vehicle for people to gain just financial independence. So amazing.
That stablecoin market cap is at over 100 billion right now, right?
Yeah. Okay, and then back to kind of the timeline. You founded Token Daily that started to grow. So Token Daily was a newsletter focusing on like Bitcoin and also like other cryptocurrencies, ICOs. Like this was like around like 2017 time?
Correct. Yeah. So we ran the gamut with what we covered. We wanted to sit in between what was increasingly a bifurcated world between Ethereum and Bitcoin. We didn't pick a side. We simply presented information and trade-offs that came with certain projects. So it was not only on the protocol level that we were covering projects, but it was also around the companies that were leveraging digital assets and bringing them to the mainstream. I think the best thing a curator can do, or any information hub do, is try to stay as objective as possible, because nothing is Shinola, right? And most things aren't completely scammy or unsubstantive, especially when they have smart people working on them and smart capital behind them. So our job and your job, and like everyone that's been in this kind of business knows, is that it's important to present things as objectively as you can and allow the reader to moralize for themselves. Right. I don't think we give them enough credit to be able to put two and two together or to come to their own conclusions. And oftentimes they'll see things that we don't see, right? Or make connections that we don't. And I think it's important to allow the user to have that agency and the reader to have that agency. So I was a big proponent about that. Anytime we publish something, it would never be all positive, but it would also rarely ever be all negative.
Mm-hmm. No, 100%. I mean, that's what we're trying to do at the Defiant as well. Just our kind of editorial policy is we are like openly bullish DeFi, like crypto. Like we obviously think this is the future, but like how we cover it is objective. Like we're not picking any sides. So yeah, totally on board with you on that. Okay, and then it's really interesting what you said, that this newsletter started really evolving into a community. So how did that happen? If you can kind of discuss any lessons that you learned from that on like other teams trying to build their own communities.
Right. So the thing about nurturing a community is that you initially, especially in the 0 to 0.5 stage, like right when you're getting it off the ground, it's a lot of heavy lifting, right? It's a lot of effort for what seems to be very little results early on. So being diligent and disciplined around hosting events, even when it's small or lower quality for the first couple, it won't always be that way. You start seeding and finding really high quality people, have them recommend their friends or their colleagues that they really respect, invite them in, making sure to stay active on different forums, like having a group chat in Telegram, having one in Slack, Discord, Reddit. The number one thing that I think separates great communities from mediocre communities is in the initial stages, and frankly, if you can keep it up beyond then, but the responsiveness of the person who originally built the community. So if you look at the top projects, I remember someone had analyzed just 0x's response rate on Reddit, and it like blew everyone else out of the water. And that necessarily led to a more active community that felt seen and felt heard. It really reminds me of the Hawthorne effect. And the Hawthorne effect is something that industrial engineers study when analyzing just optimal environments for the workplace. And so the study was to test how lighting affected workers' productivity. And so and the legitimacy of the results have been contested, whatever, but this is known as a Hawthorne effect. Anyone could look it up afterwards. But the idea was the researchers initially brightened the lighting, and workers' productivity in this factory, they were on like an assembly line or something, shot up. And so they, of course, experimented with lowering the lighting as well. And when it was darker, most of us would anticipate that productivity went down, right? Naturally, that'd be the logical next step. But similarly, productivity shot up as well and increased. So they were pretty stumped about why this was happening. And ultimately, the conclusion is it wasn't how light or dark the work environment was, but it was the fact that the workers felt like they were being observed or interacted with. And that changes how you perform. And that changes how engaged you are with your work and what you're doing. And so I often think about that when I think of the best community leaders and builders, is that they always give everyone in the community attention, make sure if they aren't the ones that are able to talk to them, they are at least linking up and meeting people who can then work with them or, be friends with. So really this idea of staying actively engaged and giving everyone attention, especially early on, is super, super important. And every project would benefit to make sure that they're being super responsive to their community.
That's great advice. And for you, how important was to have that mix of online community and in-person community? Like you mentioned, kind of like it was when you started these like in-person events that you really started to see this community kind of really take off?
Yeah. Well, pre-COVID, I probably would have said you absolutely have to have a mix of the two. And the reason is because there are just these like feel good chemicals that your brain releases when you're like face to face with somebody and you're seeing them in real life. There are spontaneous conversations that come up when you're not on like a 30-minute Zoom call and feel like you have to be more transactional or, get to a certain task, and hence like the meeting would be productive. So I would have said a hybrid model was necessary, but I've seen many successful communities do it purely online. On Deck is certainly one of them. And so I'd say it really, I don't think matters. You can do both. The thing about it though, is you really have to be disciplined about making sure people engage when it's online. And oftentimes you can do that by making sure leading up to the events, you're contacting everybody, you send multiple reminders, and give them tips on how to make the best out of the socials or whatever the events are. Otherwise, it's a lot easier to miss a Zoom call than to miss something that you're going to attend in person.
Very cool. Okay, and then how did that evolve into like you starting a venture firm?
So having a community that is built from like, and is like composed of these incredible, strong founders, really is a competitive advantage that a lot of funds don't really see early on. So what I find is that funds typically will raise and then throw some marketing dollars at building kind of a community and treat it as an afterthought. That's wrong. And the reason is because, and the reason that like isn't as helpful is because if you can build out the community first, you necessarily see more inbound with regards to deals. You really set your firm up for success from a brand perspective, from a sourcing perspective, and you really are giving back to the industry in a way that's not simply capital, which of course is, the cost of it's zero now and increasingly fungible, if you will. Like anyone can give you capital, but if you can add something that has value beyond that, I think that's incredibly important, and very few people do it well. Mm-hmm. So that was a secret sauce for Volt Capital and what got us started. And it really was an organic pull. All these great founders were coming to me anyway. And some of them wouldn't get funded. And that was really surprising to me, like who would get funded versus who wouldn't. So it was about that time when, especially like there were some projects that people weren't giving attention to early on that would then raise from these huge Silicon Valley firms. And I would see them first. And so that was when I really was inspired to start backing people from the earliest days and do that in a way that was efficient by launching Volt Capital.
Very cool. And then, so now after launching Volt Capital, did you kind of wind down Token Daily? Like how did you manage that transition?
Yeah, so Token Daily itself, we have a feed that still covers and is still curated based on the top conversations in crypto. And we put the newsletter on hiatus as we got the fund up and running, but we'll be relaunching it soon. So that's an exclusive for your community because I haven't shared that publicly.
Oh, wow. Okay, nice. So how will you handle, like, will you be kind of running the newsletter yourself, or will you have like a separate kind of editorial team doing that?
Yeah, so I used to run the Token Daily newsletter myself, and I remember people would be very surprised because they thought it was a team of like 5 or 10 people that was doing it and editing it, similar to counterparts in other sectors like Morning Brew and FinTech Today. But yeah, it was a one-woman show for a while. When we relaunch it, absolutely will be with other writers involved and having more of a team around that. Simply because one, there's so much more information in this space now that I think it's very hard for one person to do themselves unless it's a full-time job. And secondly, you get great perspectives that you're not going to always have the take that everyone should be thinking of. So it's great to have multiple takes and multiple perspectives, and you get that when you have multiple people working on something, right?
Totally. How do you manage conflict of interest though? Like you'll be investing in these projects, but also trying to cover the space objectively. So like, how do you balance that?
Yeah, you typically, one, when listing specific projects, put disclosures. And secondly, I think talking about market trends as opposed to delving into specific projects is a great way to retain a bit of objectivity, because what you'll see is that it's not like you make the investment and then the market goes one way, right? It's you will see a cohort of founders building similar things. So you'll like see 3 or 4 different projects that are building in a specific direction for a product. And that usually inspires investors thinking about where the market's headed based on what founders are building. It's not the other way around. Okay.
Yeah. Okay. And then can you kind of give more details about how you started this fund? Like how much money did you raise? Who are your investors?
Sure thing. Yeah. So we raised $10 million. We manage capital on behalf of family offices and firms and investors like Albert Wenger from USV, Founders Funds, Brian Singerman, Elad Gil, Balaji Srinivasan, CMT Digital, DCG, and others.
Wow. Very cool. I mean, congrats on this. And what have your first investments been?
Some of our investments include Magic, which is a passwordless authentication system, Nansen, which is a data and analytics play specifically focused on Ethereum. We've also invested in Coinbase, which is a platform for social tokens and NFTs, and Bitcoins, which is building a crypto exchange in Africa broadly, but specifically starting in Nigeria and Ghana. And Value, which is on a really important mission to build the crypto economy in Latin America, starting with Venezuela.
Oh, interesting. So definitely a focus on kind of emerging economies or like crypto outside of kind of US, Europe.
So I do make sure to note our investments, both like in the U.S. and outside the U.S., though it would be misleading to say that our emphasis is outside of the U.S. I'd say 80 to 90% of our deals are North American based, and that's by virtue of where we're located as a firm, right, in San Francisco. It's where we see the lion's share of our deals. That said, crypto, of course, is not a local phenomenon. It very much is a global one. So we want to make sure that we're also investing in and backing founders from these emerging markets where, frankly, I mean, those are the users that really need it most.
Mm-hmm. So can you talk more about the thesis, like your investment thesis? Like what do you look for when you're evaluating whether to invest or not?
So we look for a few things. So to back it up, our thesis itself is broadly focused on picks and shovels. So it would be a bit too broad to say just infrastructure, because that paints our crypto thesis with one brush stroke. But specifically, we're focusing on three verticals. The first is end user services. So these are companies like Magic, where the end user is able to easily log into a platform. Nansen also falls under this data and analytics tool to better understand what's going on in the market. And then the second vertical we're focused on are digital asset intermediaries. So these are anything really that facilitate the exchange between crypto and fiat. So you're looking at, or crypto to crypto, frankly. So you're looking at things like the Giving Block, which is a company that has essentially an API that allows nonprofits to accept crypto donations. Because what we were finding is that there were a lot of nonprofits that wanted to accept crypto donations, but simply didn't have the infrastructure in place, the ability to generate the documentation they need, and typically crypto donors didn't want to transfer to fiat and then donate, because at that point it's just become tax advantaged. And so it was preventing a lot of these nonprofits to access a pretty hefty amount of capital, really. They were just leaving it on the floor. So Giving Block solves that, and Bitcoins and Value, like I mentioned, also fall under that vertical. And then the third one is open finance, or DeFi, and that is anything that really carves out a traditional asset intermediary. So we're investors in Cozy, which is a risk mitigation platform for DeFi, and a few others. Slingshot as well, which is a DEX aggregator, and I'd say those are the two primary examples of the DeFi investments that we've made. Interestingly, I want to edge more into traditional tech startups that are looking to support crypto.
Okay.
Increasingly, I'm thinking that is a huge way that we get to mainstream adoption. Mm-hmm. Things like seasoned entrepreneurs that are building traditional tech products, like imagine Robinhood today, but in the pre-seed or seed stage, right, where it's traditional stocks, but then also has a crypto component to it.
So where are you seeing these companies, I mean, are you actually seeing an interest from just like traditional finance or just pure fintech companies to start adding more crypto? Like, is that kind of like in
Oh,
your pipeline?
huge. Yeah. That is, it's, in fact, there is a traditional fintech firm that is now pivoting to only crypto projects, at least for the lion's share, because that's where the puck is going. And it's very important for these traditional fintech companies to have investors on the cap table that understand how crypto works, that understand the integrations they need, which platforms are actually useful in quality versus which ones are, just held up by paper clips and gum,
Mm-hmm.
And so we're increasingly seeing way more of those companies. And that's certainly an untapped opportunity is for investors who sit at the in between traditional fintech and crypto and understand both worlds very well.
Very cool. I'm interested in your take on how you kind of evaluate good founders, because it seems like that's kind of your competitive advantage, I'd say. Like you come from kind of just like knowing people in the community, meeting these teams very early on, and from that kind of being able to judge who will make a good project. So like, what do you look for in founders?
Yeah, well, what we look for in founders really doesn't differentiate much outside of, whether it's in crypto or outside of crypto. Somebody that has had a proven track record of taking ownership and leadership. Oftentimes, it's not the only thing we index on, but something that is important is having founders who have at least started something before. So they kind of have already gone through that learning curve. Resourcefulness, evaluating the way they think in calls. The question I love asking is just about a failure and what they learned. Typically, you can tell what kind of founder someone will be based on their account of past projects. Like, do they take ownership for mistakes? Are they able to pivot when necessary and kind of remove ego from that equation? And are they persistent? And those really are ultimately what it comes down to. I will say, when you're evaluating products and projects like in these earliest stages, it is really important. This is honestly oftentimes the litmus test is, do they even have an MVP? If you are investing in something that doesn't even have a product yet, chances are, or the odds are against you. But if there's at least some kind of MVP that shows that the founder can execute, and that is something that I don't believe a lot of investors index on, because they're bought into this vision of grandeur, and oftentimes the product that ships can't live up to that. So we do oftentimes mostly require founders to have at least some kind of minimum viable product that we can test out and take for a spin.
Makes sense. Yeah, because I think it's almost become a cliche. Like I've just heard it so much from investors who say that they're investing in the team. So it's kind of like, okay, yeah, like the founders are what matters the most, and kind of the product, like they'll figure it out. But to you, it seems like it really is a combination of both. Like you need to see like some product first. Before investing.
Yeah, some kind of product, some kind of market demand, honestly. Like certainly you can build a new market and be a pioneer of a new market, but it's important that you at least communicate why you think that this market will open up more, where the initial demand is. And really it's important because it's 1/3 of the three things any investor should be evaluating. And that's 1, the founder; 2, the actual product itself, in our case, at least an MVP that we can use and enjoy and are delighted to use. And then lastly, the market. Like, is the user base even there to begin with?
Right. Makes sense. I'm interested in your take from a VC perspective on kind of the recent bull run. It must be a really kind of competitive environment for investors. just last week, Solana, Ledger announced like $300 million rounds. Like so many new deals are coming up every single day. I think today DYDX announced a new round. So it's like every day we're seeing DeFi and crypto projects raising more and more capital. How is that like kind of from the investor side? Like, are you are you having to kind of like elbow people out, like like deal with like exorbitant valuations? How's that looking like today?
Yeah, I got to brush up on our jujitsu skills. So I anticipated, and frankly, I wasn't special or different in this, but many investors anticipated a bull run, of course, just based on the crypto market's previous behavior over 3.5-year periods. And in forming Volt Capital, I remember seeing this coming, and I specifically put in the guardrail that we do not invest in anything over a $35 million valuation. And that was really important for me to keep us disciplined around valuation, because what we're seeing now is we'll oftentimes see companies that don't have a product yet raising at a $40 or $50 million valuation and getting the money that they need for it from various other funds. And to me, it does not make sense to be taking on pre-seed risk, right? Because there aren't pre-product,